guys? It is Flash back with some more charts and another video. Today is Tuesday, April 9th, 2:24 p.m. Eastern, and gonna go through some of these tickers for us to kind of figure out where we're at. If you've been following along, you know that I think there is some sort of rotation of capital heading out of general equities, call it big tech, for example, rotating into more inflation-driven equities/assets like gold, silver, oil, uranium. And what is telling me that there's this rotation going on is the gold to SPX ratio. And look where we're at. We are knocking right on the door in terms of this early breakout line. And man, it seems like no one is really looking at this or talking about it, but it is such a meaningful ratio to be looking at when determining where to allocate capital for the foreseeable future. And by foreseeable future, I mean the next 5 to 10 years. That's generally my time horizon when we're talking about investing and allocating hard-earned capital, right? I'm not a day trader. Maybe I'll swing trade something for weeks or months at a time, but generally I'm looking to buy and hold and really maximize gains over the 5, 10, 15, 20 year time frame. So that's where I'm coming from my perspective. And you see here, gold is trying to break out versus the S&P 500. And so I would say, sure, this can pop above the line. I still would expect it to consolidate in this general area. And then I would say, here's another breakout line that we'd want to get above to really confirm that we are in a bull market for gold, silver, commodities, right? So I'm expecting it to kind of go like this, maybe work its way up. And then up here, that's when things are going to get really explosive. And so that's where all the money is going to be made, in my opinion. But right here, we want to position ourselves to take advantage of this move. Again, my opinion, and it's pretty exciting, honestly, that this is kind of, the ship is turning in our favor. I've been kind of waiting for this for months, couple years even. I don't know if I'm going to go through all of these tickers today, but again, this is kind of a general update. I haven't posted in a couple days, but when we look at the S&P 500, this is kind of my expectation for the next decade is we're going to chop sideways, similar to as we did in the 1970s when inflation was pretty hot, and then even in the late 90s into the early 2000s, we literally just went sideways because inflation. And while we went sideways, that capital rotated out of equities and into gold and silver. And so another ratio that we can kind of look at is the S&P 500 measured in really inflation. And in this case, the proxy for that inflation is PPI, the Producer Price Index. So if we compare the S&P 500 in 2000 to 2010, down, up, down, again, went sideways, and then we broke out in 2013 nominally, right? But if we look at the S&P measured in inflation, we went down, barely went back up, and then a lower low, and then we broke this high later in 2016 or 2017 even. And again, that can be represented, gotta silence the phone, me, can be represented here again with the S&P 500, general sideways period for the duration of the 1970s. But when we look at the S&P measured in PPI, measured in inflation, sideways, and then inflation really took off, and that really hurt your gains when measured in the S&P 500. Took us a lot longer to break those highs than it did nominally by not measuring in inflation. So a different way to look at it, guys, but the point is when inflation is running rampant, I don't think you want to be in general equities. I think you want to rotate into gold, silver, oil, uranium type of stuff. And again, that's measured in this ratio. And so I'm going to put this on the line chart, and keep it on the monthly. But I'm going to add a ticker here, and the ticker I'm adding is the ASA, Gold and Precious Metals Fund, new price scale. And we just want to compare, like, okay, so when this rotation happens in the white, when gold is outperforming the S&P 500, look what happens to the gold and silver miners in the fund. You know, they follow that capital that is leaving equities and going into gold. Follows it all the way up, and then up here you'd likely want to rotate back into the S&P 500 NASDAQ type of equities, right? So this is, and over here you can kind of see, it's harder to see because the move is so big, but you know, we're generally following, ASA is generally following the capital flows that are going into gold and leaving the S&P 500. And so where are we today? You can kind of zoom in, and even over here it kind of looks like, yeah, they're so similar. They're lined up nearly perfectly. So like, if one breaks out, you can kind of expect the other two as well. So this is a ratio and a chart that I'm watching with like a hawk. And so we're right knocking on the door, like I said. And you know, I've been following Nvidia. You know, I think Nvidia is mostly holding up the S&P. So this looks like it's stalling. You know, no breakdown yet, but we are stalling out. And that's why I think the S&P is kind of also stalling. What else can we look at? You know, we know how strong gold is. I mean, just an incredible chart. Silver has really been charging. And so silver, I mean, I would say silver's kind of due for a pullback, but this is the breakout we wanted to see to kind of confirm this. But I think we'll kind of continue up this arc. So that looks great. And so then we have, you know, our gold miners, GDX. Again, I kind of think of this just as one big base. SILJ, silver miners, huge breakout. So you can already see the capital is already kind of, it's already going into these assets, which we want to keep track of. So I would be looking at gold miners, silver miners. You know, we look at XOP breaking out, OYH breaking out. So there's a lot of oil and gas plays that we can take advantage of. And then obviously, you know, I love my uranium. So this is just going to be a march upwards. We just got to kind of follow this 3-year moving average, follow it up this arc. We have this white arc kind of below that for additional support if we need it. And yeah, I mean, look at the Dow to gold ratio is breaking down. The Russell to gold ratio is breaking down. So again, slow and steady as she goes, but I mean, this is the moral of the story. It's the rotation. And so I'm going to throw up probably a uranium miner video just to kind of give you guys a general update of what I'm seeing there. But again, it's all steady as she goes. This is going to be a long bull market. And so, you know, my strategy is to, as soon as I have some capital I can deploy, let's deploy it into these assets that I think are going to continue going up. And we want to outperform gold. We want to outperform the S&P 500. And that's going to put us in a much better purchasing power place, per se, in the next 5 years, the next 10 years, the next 15 years. We want to build this snowball, guys. So that's my goal. That's what I'm setting out to do. That's kind of my mission. If you like that, feel free to drop me a like, give me a sub. Otherwise, I'll see you guys in the next one. This is Flash, and I'll talk to you later.